For 20 years, we've been creating innovation in the CX industry, and now we're seeking out brilliant new perspectives on CX you just won't find anywhere else. I'm Richard Owen. Welcome to the CX Iconoclast. I've had the pleasure of knowing today's guest, Martin White, through several of his many executive roles in marketing. Before he founded his consulting firm, Blackwood 86, Martin was Chief Marketing Officer at MS Amlin, and before that, he held executive and leadership roles in the financial services space at Experian, Morgan Stanley, GE Money, American Express, MBNA, and more. Customer experience was often part of his remit in these roles, so I wanted to get his thoughts on where CX should fit within organizations and the special challenges that face marketers and CX leaders in B2B companies. Martin and I also talked about the interplay between incumbent businesses and their challenges. The changes within financial services in recent years are obviously very familiar to Martin, and he offers lessons for CX leaders, really for any industry where incumbency both confers a benefit and also puts you at the risk of disruption. And I guess that applies to many industries today. As you listen, some of Martin's thoughts that you might want to listen for and consider yourself. First, there should be, in his mind, by rights, a pretty strong alignment between the customer's interests and those of the company. So marketing should, in his opinion, provide a good home for CX. There are other guests I've spoken to who think otherwise, so I'm interested in your point of view on that. In B2B, Martin says marketers and CX leaders often get pushed and pulled in many different directions, given especially the difficulty of getting meaningful C insights in a B2B environment, where customer expectations might in fact be actually shaped by consumer experiences. He also observes that companies that are threatened by upstart competitors, in his opinion, are unwise to try and defend their incumbency, really using the same techniques that they used to get them where they were today. Finally, Martin observes that CX insights are unique, in his mind, in an ability to provide innovative responses to turmoil in any industry. Enjoy the conversation. Well, Martin, thanks very much for joining us this morning or this afternoon in the UK. I want to start with perhaps a bit of reflection on your part. So, you've held a lot of different roles in sort of marketing environments in financial services. Just checking my list here: Morgan Stanley, American Express, GE Money, Experian, MS Amlin. It's a pretty illustrious list of titans of the financial markets. Let's just say that. And in most of these positions, I think, or at least several of these positions, you've been responsible for customer experience. I'm just going to start by talking about why customer experience fits in to, the marketing world at all. I mean, what's your perspective on why it's part of marketing, or why it was part of marketing in the businesses you were involved in?
Okay, I think it's a great question, and I think it's one that marketers sometimes lose track of what they're designed to do. And I think there's two key points I'd mention on that, Richard. First and foremost, what is marketing? Marketing's the process of identifying, anticipating, and satisfying, ultimately, customer requirements. Clearly, you've got to do that profitably, or you don't have a sustainable business. But that is the essence of marketing, and the customer fits very neatly at the center of that. The second point I'd make is that if I look at the stakeholders of any of those businesses that you've just outlined there, and ignoring the community element for a moment, I think there are three key stakeholders. There's the employee, there's the customer, and there's the shareholder. And I think given the financial services landscape over the course of the last 25, 30 years that I've been fortunate enough to serve in those businesses, many of them have put shareholder value right at the top of the order. That's been the great driver, and everything is needed to satisfy the needs of the hungry shareholder. The customer has probably got a charter. It probably sits on a wall. It's getting a little bit dusty and a bit wonky sitting on the wall. And employees are probably the category of stakeholder that is that many of those businesses probably feel that they have too many of, that they're sitting in palaces in high streets that they no longer wish they'd have. And so the hierarchy has been very clear in US and UK and European financial services organizations among those three stakeholders. And I fundamentally believe that the best of breed businesses reverse that hierarchy. They hire the right caliber people with the right attitude to serve the customer. They are empowered to deliver a good experience and to make the right decisions in the customer's interest. And that ultimately is how you drive customer satisfaction and engage customers in a way that makes them stickier to the organization, makes them more loyal, stimulates greater product penetration or service penetration. And over the long run, that's how you drive shareholders.
Well, and so it always seems to me like when we get into these debates about stakeholders, there's an implied trade-off here. So when we say, okay, we want to create shareholder value and we want to take care of stakeholders, well, that's a trade-off. If you're going to do the right thing for stakeholders, then you can't possibly be doing the right thing for shareholders. So if I was to sort of channel Milton Friedman here, I'd say, look, the primary purpose of the enterprise is to take care of shareholders. It makes perfect sense to focus on talent and retention of talent as a natural strategy to create that a desirable outcome. It makes perfect sense to focus on customers as a natural strategy to create that value. So explicitly, and as you know, a lot of the big banks have been saying, oh, well, we ought to define things beyond the shareholder. Isn't that a contradiction? If you're basically saying you have to call out stakeholders explicitly, then the implication is that taking care of employees doesn't directly benefit the shareholders. I mean, it seems to me like we're confused about the connection.
And I think that's very true. And these things shouldn't be called out individually. It should be a very obvious journey for organizations to understand and make that leap of faith that satisfied people satisfy customers. And over the long term, satisfied customers, no matter what you can do to the balance sheet in the short term, satisfied customers drive long-term shareholder value. And I think many organizations have lost that process, but it's the essence of marketing and organizational purpose if you can get those three in line and delivering the right way around.
So let me try and make a statement that see whether you react to this by agreeing with it. So the fundamental problem why a lot of organizations don't necessarily think of customers as important an asset as perhaps we might think they are is because short-term costs are highly visible, P&Ls are backward-looking. It's very easy to say, let's optimize our current performance. Customer investments tend to be longer-term with less certainty. And so if I'm a manager and I'm under pressure this quarter, investing in something that will pay dividends a year or two from now seems really hard decision to make, whereas cost control right now, especially in something like marketing, which is an easy target, discretionary cost, and even more so, let's not invest in marketing for the future. Let's invest in just immediate demand gen. Show me something that I can get a 1 month, 2 month return out of. So is that time problem? Is that one of the factors?
I think it is in some organizations, but it takes nothing to invest in organizational attitude, right? So if you've got your teams across the business thinking what's important, thinking what I call outside in rather than inside out, focused on the needs of the customer, that's proven time and time again, whether it's B2C or B2B, as being a very effective way to increase customer satisfaction, improve retention, stimulate loyalty, and thereby profitability. And it's like journey mapping, which many marketeers will be familiar with as a methodology to understand customer needs, priorities, help solve problems, etc. Too many organizations do that from an internal process perspective. What do we need to do to change the way we do here, rather than thinking outside in as to what's driving the customer. What are the customer's problems? What are they trying to solve? Can we do better to make that experience better? Those don't require big investments. It just requires a different way of thinking and an alternative attitude.
You'd written, I think, in one of your recent blog posts, you cited a couple of facts. McKinsey said 78% of CEOs are looking for marketing to drive growth, but marketing budgets have fallen to their lowest levels. Is this? I mean, you could argue that that's just a desire for efficiency, or is this just a contradiction?
I think it's more than that, Richard. I think given what's happened both sides of the pond over the pandemic years and the reaction to that, and the challenges that may lie ahead, organizations are looking for top-line growth and are looking for marketeers to lead the way. And marketeers can unlock that top-line growth by better investing in the customer, better investment in marketing channels and campaigns and communications to drive and stimulate the sort of behavior that will retain and attract new customers, that will drive and stimulate that top-line growth.
So here's perhaps a loaded question. What do you see as the state of the nation when it comes to UK banking in terms of customers? I mean, I think that the industry, financial services industry in general, I don't know whether you saw the recent piece that Goldman Sachs has decided not to get into checking in, at least in the United States here. And there was apparently a very vigorous debate. And the argument was Goldman wouldn't have competitive advantage getting into the checking. And apparently David Solomon, the CEO of Goldman, had argued quite vociferously that no, we should, because it's I'm paraphrasing here, it's a pretty crummy industry. Goldman could turn it on its head. Now that might not be as relevant for the UK market, but do you think the traditional banks are on their heels here relative to newcomers, or is this just over exuberant fintech investors?
Banking is obviously a very different marketplace in the UK to the US. You'll know that from seeing it both sides of the pond. But we've got a classic situation in the UK where the incumbent players have a very dominant position, have enjoyed that for a long period of time. And no matter how many challenger banks come to market, they really are struggling to gain traction and gain significant market share. And there's a couple of factors, I think, at play there, but many of the banks rely upon inertia. You look at the number of times that UK citizens move their bank accounts during their lives, or ask them in a survey, when was the last time you changed your bank account? And it goes to a long period of time. Many of the challengers have some interesting things to say. Metro Bank is a good example of a US institution that had some success and has tried to replicate that here in the UK, with customer experience being at the forefront there, but struggling really to cut through. Interestingly, in a survey I read recently, some of the best experiences in UK banking come from players that are offering no human interaction whatsoever. I recently went through a process of opening a business bank account with one of those challenger banks, no paper involved, all digitally enabled and facilitated. And that, compared to opening a business bank account with one of the traditional high street players, is a remarkably different and slick experience. So there's some very simple things that I think some of these challenges.
That's really interesting, because we think of, it's a good segue into sort of business to business, because we think of this through a consumer lens, and because the economics of consumers, everybody wants to eliminate people from the equation. But on the business side, we've always sort of stayed attached to this idea that we need to have high touch, very flexible interpersonal relationships. You're suggesting that at least there are some elements of the business-to-business experience that actually, just like consumers, should be fully automated, much more efficient. But at the same time, would you argue that in business-to-business, there's still going to be a significant human factor?
I think in many traditional B2B relationships, there's a contrast clearly between B2C, and having been a marketer in both, and many organizations that are B2B to C, I think you're absolutely right, Richard. Those business to business relationships often rely on longer, more complex B2B journeys. They involve typically more individuals along the journey. They typically have relationships that are run deeper and over a longer period of time in B2B. And customization is often more widespread in B2B. And I think the final point I'd make about that as well is that given the nature and the value of relationships, they're significant, often running to multi-million pounds or dollar relationships in B2B and not in B2C. There's a lot hanging on them, but I think are still open for better harnessing of technology and digital journeys in a way that perhaps they haven't been permeated or penetrated today.
Do you think that the CX, looking at purely from a customer experience perspective, does that create a much deeper set of challenges? Because the CX industry sort of evolved out of consumer models, and in some ways, consumer models are massively easier and simpler to think about. The consumer of the product is the buyer of the product. There's a high degree of homogeneity. Now you get into business, and just what you described, highly complex, lots of moving parts, vast ranges of contractual value. Does that create a completely different set of problems from a CX perspective?
I think it does, and the need for marketers or CX professionals to understand the overall relationship is much more complex as a result of that. Often the sheer numbers of stakeholders in that B2B relationship mean that there's more touch points required to understand how the organization's thinking. But having said that, I think the expectations of those B2B executives are very different now to what they were 5 years ago. So they expect their experience in B2B to be often as slick as it is in a B2C environment. So that business executive that's at a weekend ordering some takeaway food digitally while sitting at home watching Chelsea play Liverpool or Chelsea beat Liverpool on his TV is expecting that same slick digital experience when he's buying corporate insurance or banking services.
Yeah, I don't think that escaped anyone. Your subtle reference to a non-existent event there. But I think I take your point completely. The certain elements of the B2B experience, I think people think that way. There are tasks which need to be fully automated. They need to be very simplified. There's still, on the other hand, so much about B2B experience that is complex and unique that I think we've got the human factor is not going to be as easy to sort of remove, especially when contract values get very high. I mean, if you're dealing with a B2B relationship where you're selling someone $5,000 worth of something, it's going to look like a consumer market.
Yeah.
But if you're dealing with a $250,000 contract or $1 million contract or $100 million contract, it's going to be intrinsically more complex, more customized. There's going to be a lot of moving parts because customers expect that degree of relationship, right? That's part of what they did. And so you've been writing about agility recently as well, and so that sort of leads me into wondering: is agility the way to solve this challenge in B2B, where we're saying on one hand we want to standardize, on the other hand we want to be fast, we want to be efficient, but we want to offer superlative levels of service on a highly customized basis. To what degree is agility what is agility, and does it solve that problem?
Yeah, agility is a word that's crept into our nomenclature very, very easily over the last few years as well. I think in the corporate environment, the customer is at the heart of that as well. That's a very trite thing to say, but in recognizing and responding to customers' needs and a very shifting range of needs, whether that's in B2C or B2B, requires organizations to act differently, think differently, and almost think like a challenger rather than an established player. And that means being able to use another much abused word of late, pivot in a way that perhaps they haven't done, to think about their business model, what's working well, and adapt that and organize itself around the needs of, or the holistic needs of customers in its different marketplaces.
I mean, it sounds to me like you're defining it a couple of different ways. One is you're suggesting that a willingness to change and accept that the status quo of existing business practice may not serve businesses terribly well going forward is a sort of precursor to all of this. And agility, it sounds to me like you're defining it as an ability to execute that change to some degree.
Yes, it seems pointless for an organization that's operated in a way that has seen it perhaps defend certain markets where it's had competitive advantage and lost out by doing exactly the same and behaving the same way and putting up a helpless defense to defend other markets. It's far better for an organization to be agile, question its way of operating, question its pricing, its marketplace positioning, the way it organizes itself, but through putting that customer at the heart of it and thinking what's a better way of doing it, and almost competing with its new market challengers as a challenger to them.
Yeah, I in some ways you could say, let's go back to Goldman Sachs for a second. You could say that Goldman is really demonstrating this. Now, it may not be successful, but you've got to like the fact that they're taking a swing at it. Here's what used to be, and people could disagree with me now, the gold standard for brands and investment banking, saying we want to get into consumer business and launching this consumer brand Marcus. And critics will say, well, it's not a particularly great or innovative business, or it's not particularly accretive for Goldman's earnings. But others, you could make an argument that says, look, they are learning, they are swinging the bat at something different. And even if it doesn't work, you've got to risk some failure if you're going to be a dynamic, agile company. And the big mistake, arguably the only mistake, is if you're an entrenched existing player, sort of saying bah humbug to the idea that anybody new coming along has anything to contribute, right? It doesn't work that way in our industry, quote unquote.
I couldn't agree more, Richard. And one only has to look at the well-worn story of Kodak. You invent digital photography effectively, but can't move from the market that made you so successful for so long. That's the antithesis of agility in most people's opinion.
I'm really fascinated with B2B financial services in general, because it's organizations that exist in regulatory frameworks, and regulatory frameworks significantly constrain what businesses can do, and in doing so, favor incumbents, right? I mean, it's the closer you get to the Wild West, if you like, the easier it is for new entrants. And yet, in just about every branch of financial services, there are new entrants. And the implication is that perhaps regulatory protection is no longer impeding companies coming in quite as much. Now, you spent a lot of time in the insurance industry. That's pretty heavily regulated. Do you think insurance Do you think the insurance industry regulates competition out of existence?
And are you specifically talking about B2B insurance rather than direct lines?
For example.
I think if one looks at commercial insurance and the success of new entrants, it's been mixed. There's a lot of private equity that's chased far better returns out of specialty insurance over the last 10 years or so. But it's a cash hungry business. It's money that's tended to change the business model. The real success has come from on the distribution side of things through brokers, and it's come through managing general agents that have had the ability to tailor, dare I say, a much more customer-centric approach than that pervades many of the commercial insurers in the market. And that customer experience, that customer thinking, I think has been a factor in the way that new entrants have made their mark in that industry today. But it's the same when you look at other.
Getting back to this topic. Oh, sorry, go ahead.
You mentioned some of the American banking institutions, and I had the good fortune to spend a number of years, 20 years or so ago, but with MBNA Corporation, one of the most successful new entrants in the US and then the UK credit card industry. And at the time, that market was dominated in the UK, by the high street banks whose credit card portfolios matched their current account base. And here was this upstart American player building from scratch an enterprise here in the UK, but one that completely changed the landscape of the UK credit card industry and snatched huge amounts of market share along with the likes of Bank One and Capital One at the time. And in the case of MBNA, and despite the hugely regulated market that the UK credit card industry is, when one looks at the essence of their success, it was all about the customer. It was all about B2B to C best practice. It was convincing professional organizations and commercial establishments that their customers were in the right card issuers' hands for affinity credit card products. It was outside-in thinking that said, we shouldn't reserve the parking spaces nearest to our campus for our executives. They should be reserved for our frontline call center operatives, the customer service representatives, because we need to get them on the phones as quickly as possible. It was putting in measures that weren't revenue or sales driven. It was putting in place leading indicators like how quickly we can answer a phone, how quickly could we put in place a credit limit increase for our customers. It was those customer facing metrics and thinking that really drove that successful. So I think it can be done in B2B very effectively.
So that's a good lead in. Sort of, I was going to ask you about advice you'd give to people who are CX leaders who would typically see you as either their internal customer or, frankly, the sponsor for the entire CX initiative. And you started talking about operational metrics, and obviously our thesis in some ways and the basis of how we see the universe is very much that CX has existed a little bit too in isolation. It hasn't managed to connect itself adequately to these sort of core operations of the company. With at the risk of sort of leading the witness here, what do you see as sort of the key imperatives now for CX professionals as they're building this out? And maybe we focus on that B2B CX program that you're talking about.
Yeah, so I think it requires a bit of a mindset change in many organizations. Some would say paradigm shift, because it's very clear to me as I talk to organizations across a range of sectors now that CX programs have sometimes lost their way and become less relevant than perhaps they were as recently as 2 or 3 years ago. So something needs to break. The pandemic, I don't think, has helped, but that's an excuse for everything, right? So what needs to change and what can be done differently? I think measures is a really important thing. Yeah, that short-term thinking, putting goals around programs that are purely revenue growth, profitability oriented, I think lose sight of what the CX program is all about. There should be leading indicators in place that deliver to those lagging indicators like revenue, profitability, or growth. So seeing things like retention, speed of answering of key custom measures, product penetration, customer satisfaction, they're much more effective ways of determining long-term profitability. And I think are seen by best practice CX organizations still as growth drivers for those organizations. And they're much more effective than just a program that says we've got to deliver X in terms of sales, revenue, or profitability.
Yeah, I think we've got to think a lot more broadly in terms of data and how to link these things together if we're going to be convincing. And you know, and I do think that we're in a world where B2B and B2B2C are different. We have to figure out the right techniques to make them work. Just, you know, as a closing thought here, I know you've set up this new vehicle, Blackwood 86, which you've been working in collaboration with others to sort of drive CX transformation at other companies. What's the direction that's going to take now?
Yeah, that's been really interesting. It's been a fascinating project to immerse myself in over the course of the last 18 months. But it's very clear from a lot of the organizations, such as the type you've just outlined, Richard, that are perhaps managing programs that have lost their way, or dare I say, one or two Luddite organizations that are only now thinking about embracing a customer experience program. And, you know, in both categories, they're saying, NPS, you know, we're here, that's the right measure for us to use, but are we really going to get people to respond to surveys in the way they've always been done or traditionally been done? Is there a better way? And it's very clear, I think, from talking to another organization, to a number of organizations, that they have within their operational centers access to rich customer data and the ability to harness that data with machine learning, better ways of doing things, gives a much better predictor of customer behavior and experience in the future than the old way of simply sending out surveys that have generated decreasing levels of response over a period of time now.
Obviously, we love to hear that perspective, and I think just you know, your prior comment as well, I thought was interesting. A lot of questions I get around churn modeling as distinct from CX prediction, and it may sound like they're different domains, but people say, well, if I model my customer experience and I create a view of whether customers are loyal, and then I use that loyalty to predict churn, why don't I just use churn modeling? And I think that you made the statement that people can lose sight of both the long term and the sort of important ramifications of creating loyal customers. Churn modeling, for me, always runs the risk that you look at factors that link to churn, but not factors that link to long-term customer relationships. And so, you know, the risk is churn modeling can tell you, well, look, every time we sell this product to a customer in Kent, they churn out, we shouldn't sell this product in Kent. Not really a useful mechanism to link operations to customer experience outcomes. And I think companies spend too much time worrying superficially about churn or customer loss and not in-depth understanding the root cause of why customers churn out, the underlying reason. And so it's kind of analysis, but with a kind of loss of the big picture somewhere along the way.
Yes, I'd agree with that sentiment entirely. And I think that's a challenge that the marketers in both B2B and B2C require to attend to a lot more, and the reasons for churn. And that will probably get a lot more attention in the years ahead.
Well, that's a good note on which to end. Thanks very much, Martin. Appreciate it. Always good to catch up. Thanks very much for your comments today.
And see you in London very soon.
Thanks for listening to the CX Iconoclast from OCX Cognition. Subscribe wherever you get your podcasts so you won't miss any of our thought-provoking conversations. And please get in touch if you want to learn more about what OCX Cognition's predictive CX analytics platform can do for your business by providing complete insights into every account, continuously updated and connected to operations. You'll find contact info in the show notes.